Americans are eager to get all of the investing information they can right now. We have Common Sense with Craig. Craig is a wealth advisor and the co-founder of VestGen. Craig, there's been talk lately about whether the popular strategy of 60-40 investing is still relevant. What can you tell us about 60-40?
Well, I think there's concerns over the widely used balanced portfolio, 60% in stock, 40% in fixed income. And while the concerns aren't unfounded, they've definitely been exaggerated in various posts around the internet. But to understand 60-40, again, that's 60% allocation to the growth engine, that's stocks. That's a 40% allocation to bonds for safety. It has its roots all the way back into the 1950s under what was called modern portfolio theory and the efficient frontier. The whole idea is that investors would seek two asset classes, stocks and bonds, that wouldn't move in tandem, but would have what I call low correlation, meaning if stocks were to zig, bonds could zag. What's called it into question as of late is the massive amount of federal stimulus that created growth while lowering inflation. And that's had some people scratching their heads, especially after the bond market rout in 2022.
So you are saying 60-40 is still a good approach?
I think the 60-40 is still a good approach. I think it absolutely shouldn't be abandoned. The only thing that's happened is the patterns going back to 1950, where stocks and bonds were less correlated. I think people need to understand that with massive central bank activity all around the globe, those correlations between stocks and bonds have increased a little bit more than a lot of us would like. And for that purpose, I think it's really important that people embrace a diversified portfolio. But in a year that we've described as pragmatic optimism, I think it's going to be important that a lot of investors critically challenge themselves as they look forward into our future state to say maybe we ought to be diversifying our diversifiers, which means looking beyond just the traditional 60-40 stock to bond mix.
What could shake all of this up?
The transformative power of AI, which many people, myself, liken to as important as an invention as the smartphone, as it's going to lead to higher productivity and lower inflation. So if someone needs to get the right mix, I think it's time to have a reassessment. If you want to learn more, connect with us about diversifying your diversifiers, the inclusion of alternative investments in the right ingredient mix so that you too can not just survive retirement, but thrive. Go to getretiredstayretired.com. That's getretiredstayretired.com.